The profit formula for a dental practice, or really any business for that matter, is very simple. It's income less expenses equals profit. So if you want to increase profitability, you usually want to do two things simultaneously. One, increase income, while two, you either cut or you at least control expenditure. But what does it mean to control expenses? Well, it means doing regular review and oversight. And that's what I want to talk to you about in this week's tip. All right, so before I begin this tip, I'm going to start with a disclaimer. I am not an accountant. I am not a tax attorney. So, and laws vary state to state, and if you're watching this outside of the United States, country to country. So obviously, I depend on you to seek the proper advice from tax advisors to make sure that you're making the best decisions for your business. All right, so if I want to control my expenses, because, I'm trying to work my income up and I want more profit, I want to control my expenses, what's the first thing that I need to do? Well, the first thing I need to do is have an accurate idea of what my expenses actually are. And that would be having an accurate overhead sheet. So the problem with most overhead sheets is they're either incomplete or they're very complex and hard to think with. We have an overhead sheet that I really love. It is kind of long, but it details all the types of expenses that you might run into a dental practice, or in a dental practice rather. You can download one for free. I have the link in the description below, and you can go through it and figure out what your monthly overhead is in your practice. Now, some people look at this overhead sheet and, you remember the cartoons where people's eyes would go kind of in spirals? They just can't deal with it. Well, I know sometimes confronting finance or overhead is not fun, a bit dry, etc., or people just really hate doing it. If you own a business, this is something that you're going to have to get over, because what you don't know in this case can absolutely hurt you. To that end, if you want help compiling your overhead sheet, on our online platform, DDS Success, we have a course called it's actually a series of courses on financial management and profitability. The first course is how to determine your overhead, where I walk you through actually putting together an accurate overhead sheet. If you want to find out more about that, I'll put a link to that in the description below for DDS Success so you can check it out. All right, so let's say you have an accurate overhead sheet. Well, overhead obviously changes. How often should you review this overhead sheet? Well, if expenses stay more or less static, you're not adding any new equipment, you haven't hired any new personnel, you're not adding a bunch of new marketing campaigns or something along those lines, you could probably look at your overhead quarterly. If you add a new piece of equipment, want to add some marketing, or you're hiring a new personnel, I would look at it at that time. In other words, if I'm adding a new personnel, I want to see the impact it's going to have on my overhead, so I'm thinking with the new number. Now, if you're in an inflationary environment, it seems to have gotten a little bit better now, it was a little bit worse a few years back, I would be watching my overhead sheet probably monthly because certain categories can go a bit, I don't know if you're familiar with the term parabolic, like a parabola. For instance, postage, back in 2019, postage was, if I'm not mistaken, in the low 40-cent range for a first-class letter. Postage is now over 70 cents. That can impact your bottom line real fast. So if you see things like that happening, I would revisit my overhead sheet more often. But otherwise, if expenses aren't really changing much and I haven't added equipment, new marketing, or new staff, check it once a quarter. Otherwise, I'm checking it every time I add somebody. So now, I have an overhead. It's accurate. I'm reviewing it on a regular basis. How do I make sure that I'm actually managing my expenses and staying within my overhead? Well, I'm going to do two things. Number one, I'm going to look at my profit and loss, or P&L, monthly. I'm also going to be aware, and I'll talk a bit more about the P&L here in a second. You probably heard P&L and now you've just clicked off, haven't you? No, please stick with this if you want to maintain your expenses. I'm also going to be aware of expenses that may not be reflected on a monthly basis. Like, for instance, if you have a tax bill that comes once a year for, property in the practice, for example, depending on where you practice, you're only paying it once a year. Well, if you're not accounting for that, you won't necessarily see how it's going to impact you in the long run. So let's say I have a month where I did 100,000, my expenses were 70, my profit was 30,000 on my P&L, but the next month I do 100 again, my expenses were 70, but I have that tax bill, so now my profit only looks like it's 14 that month. Do you see? So I want to be aware of expenses that I'm going to have, like insurance expenses once a year or tax expenses and things along those lines, because they're happening once in a blue moon. Okay, so now, a couple things about this P&L. And if I'm sure you're familiar with the P&L. It basically lists how much money did you make, how much did you spend, okay, and then how much is left over. There are other things and complications that could be added to it. I'm not going to get into this video. Email me if you have questions about them, things like depreciation if it's a property or something, but let's skip that for now. Usually you see that at the end of the year anyway when your accountant makes the adjustments. But for now, basic P&L, how much I made, how much I spent, what's left over. So a couple things to keep in mind here. Number one, if you use an accountant and your accountant sends you your P&L and you're getting it 3-4 weeks after the month is ended, so let's say my month ends, I did October, and I get my P&L for October in the third week of November because, there's a delay. That doesn't really work for financial oversight and maintenance because I'm just getting a emailed PDF or a piece of paper. That doesn't work. I should be using some type of software, whether it's QuickBooks or Sage or Zoho Books or something along those lines, some financial software where I can look at my P&L in real time at least once a month. Because the other thing these softwares have as a feature is, let's say I'm looking at a particular P&L category, lab expenses. I can click the expenses I made and it'll tell me what labs we spent money on this week. If I want to do it otherwise, if I'm, my accountant's mailing my P&L, I can't do that as easily, and then financial oversight becomes a lot more difficult. Now you may say to me, Jeff, when am I going to have time to enter things into QuickBooks or Sage or whatever program that I'm using? Maybe you don't, or maybe you just don't have the bandwidth for it, in which case, pay a bookkeeper to do it. They're usually not very expensive, and chances are your accountant either has one or can recommend one that would be able to keep your books up relatively close to the present. Maybe there might be a couple days delay to make sure that your P&L is reflective of what's really going on in your practice. But to me, that's very important. I want to have access to this, and your accountant can have access to it too, and then you can see where your books are in real time. So assuming I'm looking at my P&L on a monthly basis, maybe I'm looking at it the first week after the month ends. The month ended on the 31st, I'm looking at it on the 3rd or 4th or 5th. Well, I have my overhead sheet, and I'm going to look at the overhead versus the P&L. Hopefully the categories agree. So if I have rent, and I have rent on my overhead, and I have rent on my P&L, and I have lab expenses and lab on my P&L, right? And I'm going to look and see if these are tracking with one another. And I'm going to make a note, maybe highlight it on my P&L or highlight it on, and start checking into these things on the areas which are way higher than they should be. If something is normally $5,000 a month and I spent $5,010 on it this month, I'm probably not going to freak out. If I spent $11,000 on it, or even $6,000 or $7,000 or $8,000, I'm not going to freak out, okay, maybe wrong term, but I'm definitely going to look into it, because usually when expenses start to go out of control, they start small. Not always, but sometimes they start small and build on itself, just like a cavity, okay? So I'm going to look into the areas which are way out of control. So once I've identified the areas that are way out of control on my P&L, I'm also going to look at one other piece of documentation while I'm digging into these things on my P&L, which is any credit card statements associated with the practice. So get the idea. Done my P&L, I have my overhead. I'm looking into the areas where expenses were too high, and I want to find out why. Was it an inappropriate expense? Was it something that we just bought that we shouldn't have bought, that we can cancel? I want to look at that to make sure that I keep these expenses under control. The other area I'm going to look is at my credit card statements for the practice. Now, yes, the credit card expenses should be reflected on your P&L, but I want to look at what's actually appearing on the credit card, because little teeny-weeny things can sneak in that you wouldn't be aware of. A subscription to this, phone plan, or this something over here. Little things like that can creep into your credit card, and then all of a sudden, before you know it, you're spending $500, $600, $700, $800 that you wouldn't conceive that you should be spending, and you're wondering why you have no money left at the end of the month. So I'm digging through my P&L, I'm looking at my credit card statement. This doesn't have to take very long to make sure that we are not spending money that we should not be spending. So once I've done that, and then that's why I would probably advise doing this with your office manager present, because there are certain variable categories in the practice, like lab supplies, office supplies, where you probably have office accounts for these, or they're thrown directly on your credit card, which you don't have immediate purchasing control over. In other words, a bill is just immediately incurred, okay? So let's say you're on average spending $2,000 a month on office supplies, then all of a sudden you spent $3,000. Well, that's why I'd want my office manager there, because My OM may not have even decided to do that. It might have been somebody at the front who just unilaterally decided to spend extra money on, paper or something along these lines. I'm going to want to know this so that I can stop this before it jumps out of control. So credit card, P&L, I've dug into these areas and I've made sure that any expenses that should not be being made are handled. Also, I'm walking into this with an open mind. Let's say all of a sudden my supply bill is a lot higher than I had projected for it to be. Part of what might be happening there is your supply bill normally will move up in conjunction with your production. So you may have set a supply budget when you were producing 100 a month, but now you're doing 150 or 200, but you haven't changed your supply budget. You may need to adjust budgets and go back and adjust your overhead. If I saw a supply bill higher than I thought it was going to be, I would want to get the invoices associated with that bill. Yes, I'm talking about digging, and go look at what did we buy and did we actually need it. That's how you maintain control. Now, once I've done all that, I'm maintaining the, what we're outlaying as far as expenses. The next thing I'm going to look at is my profit, my bottom line at the bottom of the P&L. Now, depending on how you're set up, and this really depends, this is an accountant type question for you. Some people will disperse some of that profit to themselves, some won't. In any event, what I want to check with my accountant, whether I'm dispersing profit or not, let's say my overhead was 70 and we did 100 this month and my profit at the end of the month was 30. Well, two things. Number one, I'm going to want to make sure that I'm aware of these yearly bills that I'm going to have to make sure I leave enough in the account month to month to month to month to cover that yearly bill when it comes in. That's the first thing. The second thing is if I'm subject to quarterly taxes, okay, I'm going to want to take a look at that profit margin and talk to my accountant and ask how much of that should I be saving for taxes so that when my quarterly tax bill comes due, I actually have the money. Like there's nothing worse than talking to somebody and they tell me I'm scrambling to pay my quarterlies. No, you incurred the bill every month. Have the money sitting there so that when the bill comes due, you just have it and you write a check. And those are the basic things that I would be doing on a monthly basis. Obviously, I talked about overhead review. That might be monthly, quarterly, etc. But I would be looking at my expenses every month because if you step away from that, they can spiral out of control very quickly. And again, what you're spending is part of the profit formula. And of course, there's a bunch of other stuff you can do. I know I'm being rather simplistic here, but those are some of the basic things I would want to see you doing every month. I would also suggest that you perform some degree of oversight on your income. Okay, I've been doing this for a while, and I would say that 99.9% of the cases of embezzlement that I've seen in dental practices over the years could have been avoided if someone was actually just looking. Okay, like I'm not joking. I've seen some ingenious ones which even bypass the looking, but for the most part, the reason why you get this embezzlement is nobody's actually looking. No one's looking at the day sheet and matching it up to the deposit, and did we actually put that in the bank? And wait a minute, I thought this person paid us $500. Where is it? Your day sheet should be being reviewed every day to make sure that it actually matches up with what is making it to the bank. That way you don't end up losing income and creating a problem for yourself. So that's some of the basics there. It's a shorter tip. I didn't want to spend forever on this. We have courses on this, as I mentioned, on DDS Success. You can check out, again, check the link, my selfless promotion there in the description below. Kind of a dry subject, but an important subject. Not the most exciting thing to talk about, but it's something that you got to do. And if you maintain control over your finances and you invest well in good marketing, good training for your team, and things along those lines, your income should go up. So if your income's going up and you're controlling your expenses, you should be seeing more profit. So I hope this helps. And if you want to see more tips like this, don't forget to click the subscribe button and the notification bell so you're notified immediately when we have tips like this as they come out. If you want to find out more about MGE, you can find us online at mgeonline.com or call us at 800-640-1140. Folks, have a great week, and we'll see you at the next tip.